I think we have seen this massive pickup in yields, of course, which led to low price losses on the bond side. But I think where we are right now, you're right. We call it there's income back in fixed income. So from that perspective, our view is that maybe on the longer end, on the 10 years, if you look at growth in the future, where we think, unfortunately, growth will be lower, and we even think of a recession in Europe and the US. And that means down the road, probably we are now at levels in the 10 years we are seeing maybe in 1 year's time. So in between, it could be a bit higher, but with recession, it could then be around these levels. That's what we think. On the shorter end, of course, with central action, that will rise. But I think then if you look from that perspective, as we don't expect, at least in the US, a severe recession, rather a mild recession, I think that's a much better environment for bonds than, of course, we had 1 year ago.
It is a much better environment, but again, you can't eat negative yield in terms of the real world, Christian, as well. By investing, albeit at the best yields we've seen in over a decade, whether it be in the Bund or elsewhere in the European fixed income space, you are still getting a negative real world yield. What do your clients say to that?
Well, that's true. And of course, you need to think then, what can you do with your portfolios, right? You need to look, of course, at real yields, at real returns. So after inflation, or with that higher inflation, there's an impact. However, we think, if you think a little bit out of this next maybe 2-3 months, there is a need, of course, for real assets, and equities, in a sense, are part of this. From that perspective, we are not that negative in equities. We rather think, because of this environment, that in a tough environment, as I said, over maybe the next 1-2 months, that's rather an opportunity. So we have been calling for buying the next dip. And I think that's where investors want to go as well, because you're right, eventually they will demand a return, which is also on a real basis positive for them.
Christian, it's incredibly hard to wrestle the narrative away from the Fed at this point. And yesterday, the ECB managed to get a market reaction. We saw bond yield step high. We saw the euro also elevated. What did you make of the communication from Christine Lagarde in terms of getting ahead of those inflation expectations and sounds serious about tackling rates?
Yeah, I think the ECB is now much clearer, I think, in their communication strategy, where they're going. And from that perspective, that for them, highest hike they've ever delivered makes a lot of sense. I was always saying the earlier they can hike, the better, because as I'm talking about lower growth and even a recession in Europe, their window is closing down a little bit. And from that perspective, I would say it's to be welcomed that they now move, and also mentioned explicitly that they will continue to do so. They talked even about the numbers of moves. So I think they are much clearer now where they want to go, and I think that's appreciated by the markets.
Christian, as we talk about the halls of power, is there some denial about a recession potential in Europe still? I mean, when you listen to Christian Lindner today from Germany, he's talking about fiscal discipline needing to return. We've got Christine Lagarde and co. not exactly looking at recession at this point, but talking about stagflation. Is there just some sort of sense of denial that a severe downturn is possible in Europe?
Well, I think people still try to do everything to at least show, to try to avoid recession. But from our point of view, it's really tough in this environment to stay at least at zero. We think it will go below with that energy prices. In that sense, it's quite important, really, what's coming from the fiscal side. And we do expect a lot of countries to do fiscal measures. Here in Germany, we have seen this already. In the UK, there's discussions, of course. Obviously, a lot of things are to come. So I think that could help on growth. But I think you need to be honest, it's probably tough to avoid a recession at this point in time in Europe.